Hi y'all, this is day one of Backtesting ICT Concepts. So before each and every trade, the first thing I'd like to look for is a break of structure. A break of structure gives us our entry point and it tells us exactly where the market will pull back from so that we can get our entry. So when you get a break of structure, the second thing you need to look for is a fair value gap, a supply and demand zone, a resistance zone, anything that signifies to you that we are going to take that trade there. So thirdly, as you can see, we are targeting the lowest point of our trade areas, which is where we would like to take our profit at. So for the supply and demand zones, I would like to make it a point that I usually target the first candle and the last candle in between the fair value gap, which is where I would take my trade, and always keep a tight stop loss. Our stop loss is never anything above 20 pips, but then our take profit has to be at least a 1 to 4 and going upwards. I personally do not risk anything more than 15 pips on a single trade, just according to my trading style and how I've developed my strategy. My ideal risk to reward would be anything above a 1 to 1, but nothing above a 1 to 3. One major important thing that I have realized is that it's very important to identify your break of structure, because without your break of structure, you do not have anything substantial to support your trade. So first things first, you need to always make sure that you have a clear break of structure so that we can pull back into an area of supply or an area of demand, or as the retail traders like to call it, an area of resistance or support. Now, as you are backtesting, it is very important to record the trades that you backtest so that when it comes to the live market, you know what to look for and you know exactly what not to do and what to do. This can help you filter out all the noise and just simply identify whether or not you are going to trade. So as you can see now, I'm looking at the overall direction. The overall direction is bearish, which is why we have decided to take ourselves on our supply area. Guys, the trend is your best friend, meaning that the trend that you see is usually what you would want to take. You do not want to take any trades that go against the trend. That is called counter trend trading, which is very risky to your capital because you aren't following what the market is doing. In fact, you are doing the opposite of what the market is doing. This type of trading style allows me to steer away from always using trend lines, which are always easily manipulated. So in this way, I don't have to use trend lines to validate my trades. So yeah, guys, if you guys made it this far, I appreciate the love and the support. I will be dropping an unhealthy amount of these every single week. So stay tuned for more, and peace.